Hello, Oracles. Well, today we are going to be taking a look at the fact that Tesla is getting ready to either break out or break down. We've been trading right around this $123 level, and we're just waiting for something to happen that's going to move us one way or the other. There's a few indications coming up that are going to show us which way we could potentially move. We will get into that in a minute. All right, so looking at the chart here, as we know, we have been trading right around this $123 level. We've been going a little above, a little below, but we continue to return to this level. Now, as you see here, this is that $122 level that we have had set in here for quite a while. And what I'm going to do here is I'm going to bold this out a little bit more so we can see it, because this is becoming a very strong support. So what I like to do is when we get to stronger levels, I will bold them out so we can see how strong they are. So this right now is a support slash resistance level because we just keep on getting drawn right back to it. So the question is, where are we going to go from here? Are we going to break out or break down? So some of the indications that we do have this gap down here to 114.39. We got a partial fill on it earlier this week, but not a full gap fill. We've seen this happen in the past. We were up around that $290 level. We had a partial gap fill, went back up for a little bit, and then came back down to fill it again. From talking in the past, you guys know that gaps fill 9 out of 10 times. For those of you guys who are newer to the channel, when we talk about gaps, this is when the stock price closes at one level, which at this point here was 114.39, and then it gapped up, which means that it opened up higher the next day. So there was this gap between 114.39 and 114.92 that the stock market wants to fill. Now, we have come down to fill part of it, but not all the way. So we will pay attention to this and see which way we go. Now, other indications that we have we'll get into in a minute, and they're more on the macro level. So now RSI, which is the relative strength index, we're at 39.73. This is above oversold. Oversold is usually at that 30 mark, which you saw we were under for quite a while here. We have now pushed up above this. So in the past, we have seen us dip, come up, dip back down, come up, and this was our dead cat bounce all the way down. So the question here is, are we going to see another one or are we going to break out? Now we pay attention to volume. Volume now is significantly higher than it was last month. Last month we were barely hitting, 50, 80 million. Now we're pushing 130 million, 160 million. We're pushing over 200 million shares trading hands. That is institutional money. We know that ARK has been buying quite a bit. We will discuss a lot more of the institutional buying tomorrow night with Alexandra. She will be on the channel. If you guys have any questions for her about any of this, please feel free to hop on, ask her all the questions you have because she has been diving deep into the institutional holdings of everything. When Moody's comes out and they upgrade Tesla to investment grade, this is going to make a significant difference as well because even more institutions will be able to get in. So we can see a very strong push with this. This is creating a nice, strong foundation. So not to say that institutions won't sell, but they typically come in and they buy for the long term. So unless something fundamentally collapses in either the macro environment or Tesla in particular, we can say that these are going to be relatively strong levels because this is where they have been buying a lot at. So where do we go from here? From a Tesla standpoint, we have earnings coming up in a week and a half. On the 25th, we will have earnings. We know that Elon said that we'd be seeing an epic Q4. Based upon delivery numbers, we saw a 40% year-over-year growth. To some people, that was epic. Based upon the entire automotive market, that is pretty darn epic. But when it comes to the expectations that Wall Street had, it was not. So, sad to say, that just happens to be the truth. But when it comes to the actual financials and the earnings, we're going to look at EPS, because that could still potentially be growing significantly higher than 40%. So if Tesla's growing at 50% in EPS, that is a major difference because that is what they're paying the bills with, not deliveries. So whether we break out in the next week or so or not, we're not sure, but earnings is definitely going to be moving the stock one way or the other. We also have tech earnings coming up at the same time. And now as I was diving in looking at the indices, I noticed a funny little pattern starting to form here in the Nasdaq and in the SPY. We are seeing, and we saw this in Tesla back in September, Looks like a little bit of a cup and handle potentially forming here. So it looks like we may be coming to the end of this cup, and then we could be getting the handle. Maybe that comes during tech earnings. Maybe this breaks down. Now, typically a cup and handle pattern does indicate a bullish pattern and a breakout coming. However, like we said, back when we saw this with Tesla in September, that did not happen. It broke down and we fell out of it. And now looking at the SPY, it seems like a very similar pattern. So again, these are just things I'm looking at, and it looks like Tesla is not trading along with the indices at the moment. So there's something going on in Tesla that's a little bit disconnected, and we know full well there's a massive disconnect with Tesla and the stock price right now when it comes to fundamentals. But when it comes to the entire macro environment, seems like there's a big disconnect as well. It's not trending with the macro environment like many other stocks are. So if the macro environment breaks out, Tesla may break out with it. We have Jerome Powell coming out tomorrow to speak to give us some indication as to what the Fed is looking at. We got our inflation reading today. CPI came in right in line at that 6.5% expectations. The month over month ended up coming in lower. We came in at a negative 0.1% with CPI. So that there is indicating that we are seeing deflationary pressures. Chances are this might lead the Fed to pivot sooner than expected. We also are indicating that we may see a 25 basis point hike on February 1st rather than a 50 basis point hike. Jerome Powell may be speaking about this tomorrow, so we'll be paying close attention to that. When it comes to the pivot, their original pivot was probably scheduled to around Q2 of 2024. It may now potentially happen in Q4 of 2023. Now, remember, we've been talking about the pivot coming, and typically when you look at charts in the history, we see a bit of a 6-month run of the stock market going up into the pivot, and then we see a sell the news situation, a sharp drop off, and then a V bounce coming back up. That V bounce will come back up, and then based upon how the economy is recovering from that pivot, will give us an indication as to whether we're going to continue running into a bull market afterwards, or if something else is going to happen. So these are just the indications, still have a lot of information to go through to figure out if this is truly what's going to happen. And now next week, we are also expecting the PPI data. That is going to be the producer price index. That kind of gives us an indication as to where the costs of goods are trading and whether they're going up or down. That has also been trending down over the last 7 months. So if that trend ends up continuing, that is another good sign that the Fed can say, all right, our policy is working. Raising these interest rates has been working. We can continue going forward. So if that does come in line and continues coming down, that may solidify that 25 basis point hike. And so going back to whether Tesla is going to break out or break down could come down to what's happening in the macro, and maybe Tesla comes out and announces something. We've had a lot of negative sentiment and negative news going around Tesla lately. Over the last month or so, it has just been ugly in the Tesla bull community. The last week has been kind of feeling a little bit lighter. So for me personally, this is one of those things where I say, starting to feel it. I'm not going to get overly excited. I don't want to get into that hopium stage that we were before, but hey, this is a good sign. Let's take one step at a time and continue this moving forward. So, we're hearing all sorts of rumors coming out about Tesla again, factories potentially in Mexico or Indonesia. And we're hearing good news about Giga Berlin now having 8,500 staff, only 3,500 employees away from achieving its first expansion phase employment goal. And Giga Shanghai set a new production record in Q4 with 235,000 cars being produced. Now, Roland did screw up the numbers, but he corrected them down below. So that is a 19% quarter over quarter and a 31% quarter over year growth. And so getting some positive news like this is causing the sentiment to be a little bit lighter in the community. So right now, we're just still waiting for Tesla to give us some information. And so Tesla could come out any day now and announce a gigafactory being open, and that could cause the breakout. So right now, hovering at this $123 level is either waiting for the macro to make a big move in one way or the other, which could happen tomorrow with Jerome Powell coming out, or it could happen from something Tesla specific and them coming out and giving us some very good or some not so good news. That could cause us to break one way or the other. So right now, we're just kind of trading sideways, awaiting something. We've seen this happen in the past. It's kind of like holding our breath, just waiting for, all right, which way are we going to go here? That's where we're at right now. And you guys can let me know in the comments below which way you think we are going to move and when you think that is going to happen. What do you think is going to cause this? Do you think it's going to be macro related? Or do you think it's going to be something that Tesla announces? Or do you think we're just going to keep trading sideways until we get to earnings? Now, me personally, taking a look at it, that's all near-term stuff. It's fun to talk about, nice to understand why we move in different ways for certain reasons. But realistically, when we look at it on a long-term scale, and even if we just look out just a year, we'll call a year long-term, which I don't really consider a year to be long-term. We'll call that medium-term, where I thought we were going to be maybe having the Fed pivot in Q2 of 2024, we might have that happen 2 quarters earlier. So that means that our buying opportunity might be shortened a little bit. Not to say that once we hit that point, we're going to go running, but we might see some nice pushing and growth coming sooner than we thought. So, not financial advice. I'm not saying buy any heavier. I'm not saying add money in now. It's still kind of a wait kind of situation. I do think we may still pull down further before we get there. One of the reasons behind that is because just because the inflation is coming down doesn't mean that we are not in a recession. Got to remember, having a negative 0.1% month over month means that prices are coming down. If prices are coming down on things, that means that when it comes to earnings, we are going to see negative growth in earnings as well. That will give us that indication of a potential recession because then we have to follow the GDP. And if GDP is also going in that direction, we'll get to that recession. That recession might actually be shallower than anticipated, but we still need the market to react to that. And we don't see a lot of a recession priced in right now. So we still have to pay attention to that to see if we are going to be getting that kind of market reaction to a recession, to maybe some negative earnings coming through before we hit the bottom. I think if we have not hit the bottom yet, we will probably end up seeing that about that March to April timeframe. We'll see that bottom coming in because right around that time, we'll be getting to that next FOMC meeting. We've got one on February 1st, and then we're going to have the next one in mid-March. That time right there, we will have a lot more information as to, is the Fed going to pause? How much longer are we going to go before the Fed does end up pivoting? How fast is inflation coming down? And how many quarters is it going to be affecting earnings and the GDP? So all of those questions need to get answered, and the stock market is going to be trading according to that. So we might see another little bit of a pullback. I do think that if we do pull back, it's only going to be one more time. I don't know how far it will go, but I think that will be the last one if we pull back one more time. Again, my 3 levels that I was watching for Tesla were $100, $80, and $57. So a lot of data still needs to come in. Right now, that data is looking good and could be indicating that $80 or $100 could be the bottom, but we still need to pay attention. And you guys can let me know in the comments below what levels you think we are going to hit. Maybe you have some of your own levels that you're paying attention to as well. So overall, though, looking really long-term here, when I'm talking long-term, 5 to 10 years minimum, these times right now are still prime buying times to me. We're seeing ARK buying a crap load of Tesla right now. They still have a lot of money to buy a lot more. We are going to be seeing more institutions coming in as well. Again, we'll be going over that again with Alexandra tomorrow night. And we'll see this bottom level of Tesla is going to be growing heavy with institutional holdings. That's why I am buying right now, but I'm just waiting to see where that bottom is going to be before I dump in my money heavier. Thank you all so much for watching. Thank you for your support. Have a great one.